SDS is primarily involved in the manufacturing and retailing of bakery products. The group has two main operating segments: retail under the SDS brand and wholesale with the Top Baker and Dailies brands. The wholesale segment is the bigger revenue contributor, but the retail segment had a higher growth rate and profit margin. The bulk of the group's revenue is derived from Malaysia. Despite operating in a mature sector, SDS delivered a double-digit revenue growth rate over the past decade. Profit grew at about double the revenue growth rate, with a significant spike in 2023 due to higher sales and better gross profit margins. The improving profits led to improving returns. Return on invested capital averaged 15% while return on equity averaged 15.8%. Both returns were greater than the respective cost of funds, implying that it created shareholders' value. SDS has made strides in operating efficiency with improving trends for the contribution margin and capital turnover. There was higher profitability and asset utilization while expenses were stable. But capital efficiency shows mixed performance, with improving asset turnover and volatile free cash flow. With the positive trends outweighing the negative ones, the group is better off today than a decade ago. Compared to several Bursa companies in the snacks, confectionery and bakery sectors, SDS revenue was lower than the peer average. However, it has the best revenue growth rate. SDS had one of the better return on capital, especially post-2020. But EBIT margin was among the worst, especially in the initial years. But there seems to be some improvement since 2022. It had an average levered free cash flow margin. While SDS had the best earnings per share before 2019, it became among the worst thereafter. From a financial perspective, SDS has a strong cash position, low debt, low reinvestment rate and good capital allocation. As such, I would rate it as financially sound. From a valuation angle, SDS has an intrinsic value of ringgit 1.53 per share. This was higher than its book value and the market price of ringgit 1.23 per share. But there is only 25% margin of safety. I would rate SDS as fundamentally sound with its track record and financial position. But there is not enough margin of safety. SDS is a viable investment opportunity, but the entry price will depend on your risk tolerance. The information presented is for educational purposes only. For more details, read the blog article. Thank you.